Hi everybody, this is the Euro dollar daily chart. It's Monday evening in the US. So what we talked about last week, we considered that this would be maybe a base for a uptrend. This is could be considered and is considered to be the first point. We talked about that this could be the second one, and that if he breaks this level here, that would confirm it and could potentially go higher. Well, he did break it, but without much follow through, and the market is still in a period of configuration of consolidation from that move up. Different thing is happening. There are some discussion with Greek again back in the news that is probably avoiding the euro to go back up. This here is a zone of previous consolidation, which is now acting as a resistance level. So if you've entered here from last week, you'll probably be a bit disappointed now because of the no follow through. But the behavior of the currency right now, it's yes, it is going down, but it's still going down in a little bit of a consolidation pattern. So we have to weather the storm and wait for the currency to reach that level and see how it's going to act at that level, because that is a strong level of support. So potentially what we can see can happen is that the currency may actually reach that level here, and hopefully will rebound and go back up to break that level, the next level of resistance. So this move down may be a build up to break that level here. If it is build up to break that level here, then we don't want it to break under the 1.10, and definitely not under the 1.10 figure. If it goes down under the 1.10 figure, then it would go back into that zone here and may actually range back down or move back down. But it is the first time for many weeks that the euro dollar has broken above the trend dragon trend line substantially. It hasn't done it before, except here it did it, but did not stay above it very long and just went right back down. This time around we had a long period of consolidation, flattening of the line, and a break of many days of follow through. So right now we could say that it is consolidating from that move up, and we have to wait. And normally uh, it may just be a build up to break that line of resistance here. This should probably be confirmed, or a better chance to happen if he breaks the 1.13, 1.14 level for that. So on the long side, if you're already long, well, you probably want to hold and until you break the 1.10 figure. If you break the 1.10 figure, then we need to reconsider and basically activate our stop losses and probably go back short. If you're not in position, I would look at that level here, that new level of resistance at 1.13, 1.14. I would say 1.14 figure. Look at an opportunity to enter into that zone, because I would probably mean that the currency is trying to break that level of resistance here. Nothing much else to say about the euro dollar. Obviously, right now on the daily chart, the level to look at is the 1.10 figure and the 1.14 figure, quite about 400 pip. So if you look in the lower time frame, you may want to be looking at that, which we're going to do right now. So I'm going to put a line here that would be representing the daily level of support, and we'll go to the hourly and see what's going on. Obviously, the hourly, once it broke down under the dragon trend line and that level of support here, it entered into a downtrend, but a very choppy downtrend, very volatile downtrend, not very clean. But that would be the point number one, point number two here, and I would say that this may create a point number three, but as you can see, it's really consolidating a lot. So if it breaks under the 1.1130 area, then you can expect it to go even further down, probably to the daily support at 1.10 figure, 1.10, I'm sorry, 1.1040 to 1.10 figure. That could very much happen. So if you want to go short on a short term, that's the level I'll be looking at, uh, and be very cautious as far as your stop losses, because the daily chart is still showing us a currency into consolidation following a move up. Now, the British pound is certainly in the news. This week has been going up very quickly, and this is news driven because there have been some big election in England, and the Conservative have gone back into power. I mean, they were in power, but they stay in power, which was a big surprise. And basically, now the British pound seems to be into a fairly nice uptrend configuration. Lower point here, broke up a little bit here, create a second point here, went up quite nicely. And last week, that's what we talked about, came down but never broke that level of support here. Now it's going back up, moving that level, breaking that level of resistance here, also breaking that level of resistance previously that was right here. Now it's hitting a little bit of resistance because of that previous zone here of consolidation, but quite possibly a definite move up, quite strong. 1, 2, 3, 4, 5, 6 days positive. Today seems to be also positive. So even though it retraced a little bit here, but it seems that this week the British pound may actually go higher. So if you're looking at following that move, you would be looking at a stop loss around that level here, which is it doesn't tell me here. So let's look. That level here would be around 154.90. Tighter would be under 155.34. So better look at the hourly chart and see what's going on. Hourly chart, of course, confirm that move. There have been a little bit of a concern here. This gap up here is a bit concerning because usually we'll try to fill up that gap up, but did not really happen last week or the past 2 weeks. And now on the hourly chart, after that big move, the currency is in consolidation mode, and could actually go back down to the dragon trend line at 155.00. That's quite possible, or that level of support here, which is 154.75. So quite possible the currency will do that. If it does, doesn't mean that the trend is changing. It may be just be a retracement or correction to move back up. Of course, the level of entry here would be to take out the previous high at 1.5612, at least on the hourly chart, and that's confirmed also on the daily chart. So looking at long opportunities in the British pound. If you want short-term counter trend, short entry, of course you can look at this zone here, but it may be a bit difficult. It's only 50 pip and might be difficult to work on. Finally, the Japanese yen. Japanese yen, nothing new under the sun. Still into a consolidation pattern. The level are pretty clear on that one. They are about here um, and here. This would be the trending zone, which this week has been reducing, but seems to want to break the a daily resistance line and could want to go back to that level 125.70, 120.70. Be cautious on that level because as that currency has been ranging now, once it reach that level, you may actually want to return back down to 118.57. So hard for the Japanese yen to give us any kind of direction. The trend meter is virtually flat and sideways, been doing that for quite some time. But this is characteristic of the Japanese yen. Long period of consolidation with after that big big short move, um, big short move in comparison to the period of consolidation. If you look previously, we had a very long period of consolidation here, then a big sharp move here, and then follow now by another long period of consolidation. So if I had to have an opinion, I think that we will still be looking at maybe going up on it, but that would be the dollar going up, and the indication of the British pound and the euro means that seems to mean that the dollar is losing ground. It's quite possible that actually the Japanese yen might follow suit later. But no indication now to tell us really where it is going. I don't have right now. It's just basically ranging, and we have to wait and see. And both case scenario could happen. So that's it for today. If you have any questions, send me a quick note on YouTube or Udemy or email, whichever, or give me a call. Happy trading.